Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Earnings season is underway in the U.S. It kicked off with the big banks this past week. Also, Fed Chair Jay Powell signaled the U.S. central bank is on track to deliver another quarter-point interest rate cut later on this month. And then there's the U.S. government shutdown, now in its third week. You could read all about it at Bloomberg.com and on the Bloomberg. And, about that government shutdown, that meant another week without U.S. economic data from the U.S. government. And so we lean big time on voices from the C-suite for clues on the macro environment. This hour, we'll hear from the CFO of Levi Strauss and the CEO of the industrial supplies company, Fastenal. They've got great reads on the U.S. economy. And the C-suite is really where we start this hour, with one CEO in particular and one voice on Wall Street that we all pay attention to. JP Morgan Chase CEO Jamie Dimon. JP Morgan and the other big banks, as we mentioned, reported earnings this week. And generally speaking, all appear to be in good health. Deal making is back and trading profits are booming. And yet there were warnings from executives that have tempered the mood on consumers and some signs of sectors that are cooling. A warning, too, from Jamie Dimon, who used his bank's losses from auto lender Tricolor Holdings to say there's never just one problem or one cockroach, in his own words, a quip some of his non-bank rivals have taken as a shot at them.
We think we're okay and other stuff, but my antenna goes up when things like that happen. And I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one.
That's JP Morgan's Jamie Dimon. Now, Blue Owl Capital boss Mark Lipschultz fired back. He came on Bloomberg. He said the issue was in loans that banks led, so Jamie Dimon should be scouring his own books if he wants to squash more bugs. Read more about the back and forth. It's on the Bloomberg and at Bloomberg.com. Other companies kicking off earnings too this week, and it's kind of no surprise. AI, artificial intelligence. Talk about that has been dominating earnings conversations for the past year. And that includes AI in the real estate market. Prologis develops and manages logistical warehouses for the biggest companies out there, with more than 1.3 billion square feet in 20 countries. Prologis reported better than expected quarterly earnings this past week, boosted its forecast, and discussed data center opportunities. Dan Leder is president and incoming CEO of Prologis. He takes over as CEO in January. He joined Bloomberg's David Gora and me.
Coming off this earnings call, this was certainly a topic for us. We had a tremendous quarter. As a matter of fact, we broke a record this quarter for leasing. We leased 62 million square feet of space throughout our 1.3 billion square foot portfolio. And you think about that in context, 62 million square feet is the equivalent of leasing Central Park in Manhattan twice over again in one quarter. So our team, working tirelessly around the world, leased 1 million square feet a business day during the third quarter. And certainly these macro business trends are telling by our customers who are the front line of the economy.
You look at the softer data, and there is still some anxiety among a lot of business leaders about where things are headed. Maybe that's restricting them from making some of the CapEx expenditures that they would have otherwise. You're detailing for us very strong numbers, and I wonder what that says to you just about the capacity of these business leaders to look through or past the uncertainty surrounding policy, including trade policy. Just give us a sense of the moment that we're in right now as you understand it from talking to your customers about how they're feeling about the business climate going forward.
Sure. It's a great question. One of the things we're most proud of at Prologis is our customer franchise. We have unique proprietary data and we have unique relationships, just given the size and scale of these relationships. And after what has really been 2 to 3 years of uncertainty, going back to rate hikes 2.5 years ago, we see our customers actually getting off their back foot. What we've seen over this last quarter is actually customers moving from caution to optimism.
Wow. Why? Because things are getting settled in terms of trade, tariff? Like, what is it that has calmed some of your customers?
I think our customers realized after a couple sluggish years of not making many decisions that they have to make long-term decisions. And that's what they do when they do business with Prologis. And they have to look through the short-term noise in order to ensure that they're positioned for growth going forward.
So you're talking about Amazon, Home Depot, FedEx, UPS, GigaCloud Technology. I mean, these are some of your big customers. So you're talking about these guys are feeling more sure about the outlook than maybe they did over the last couple of years.
Yeah, precisely. As a matter of fact, coming out of a cycle, we're really in just a classic real estate cycle right now. And what you're seeing typically at this point in the cycle is it's the big, well-capitalized customers that lead the way out of this part of the cycle.
This is a basic question, you'll forgive me for, but when we talk about warehouses, what are we talking about? Are these just simply places to store stuff, or are they places where there's a lot of movement, a lot of products coming in and out? When we talk about sort of the bread and butter of your business, what are you building, what are you leasing out?
Yeah, thanks for that question. We own nearly 6,000 buildings. These buildings are located in 20 countries in markets that represent about 78% of the world GDP. As a matter of fact, in 2024, we had the equivalent of nearly 3% of the world GDP go through these buildings. Our focus in building this portfolio, curating this portfolio over the last 42 years is having the highest quality, best located logistics real estate close to consumers.
So where are you geographically building out the most? And, where are you looking to kind of increase your square footage or buy properties or buy land?
Well, the way we've set this organization up is our teams are calibrated to look for good deals around the world. And we're heavily focused, certainly this year, on build-to-suits with our customers. We're on track for maybe our highest build-to-suit volume ever. And what does that mean? That means we have a contract in place with these customers before we start building for them. And we're seeing that broad-based across most of the sectors as well as geographies spread throughout the world.
I bet you can't do an interview without being asked about AI, so forgive me. We're going to do it. And I want to ask about it in two ways. The first is sort of how it's changing the way that you conduct your business. And then the second question is picking up on what Carol said. You looking at the demand for data centers, maybe changing your business tack as well. Where do you see opportunity as this revolution, as it's called, continues and there's the need for more space for processing all of this data?
It's AI is here, and it's big, and it's big at Prologis. Certainly, we have all sorts of different operational and tools that we're building to make our teams more efficient and to be able to help them move faster. But when you think of AI and Prologis, we announced today we now have 5.2 gigawatts of power, either secured or in the advanced stages of being secured in sites, mostly tier 1, tier 2 sites in the United States, and then the tier 1 markets called FLAP-D or the double M in Europe. So Prologis is now, we've long been in the higher and better use business, but again, given that footprint we have close to these consumers, well, the next wave in the modern economy is the digital economy, and AI and data centers are the logistics of that digital economy. We're talking about
Dan Leder. He's president of Prologis. He is incoming CEO, takes over that spot come January. Wait, Dan, so give me an idea, just to explain your business. How much is logistical warehousing right now? How much is data center? And where do you see the most growth going forward, especially on a day where Meta, Microsoft, BlackRock, there's more, all doing data center, deals, and it feels like a lot's happening in Texas, to point that out as well. So give us an idea of your mix today and where the growth is happening.
Well, I look at our growth in our base portfolio. We own or control 14,000 acres of land close to these consumption centers that I mentioned. We can build out another 240 million square feet out of that land bank. That's a tremendous amount of space. And when it comes to data centers, this power that we've secured, we've long been in the higher and better use business. Think about the fact that logistics and warehouses is typically the cheapest house on the block. We've always been in the business of optimizing that real estate value for our investors. And data centers are certainly a trend right now that we're able to capitalize on, given the footprint and the raw material that we own and control.
Just want to note a headline here across the Bloomberg terminal that a judge has blocked federal firings during the government shutdown for now. We were talking about that a few moments ago as we were talking about the Beige Book from the Federal Reserve, Dan, and what that was telling us about the state of this economy. And one thing therein is how difficult it is to find workers, particularly workers to do construction. And I think a theme to the AI story is amid all of this demand, it's hard to get folks to build the data centers that we need to buffet all of it. And I wonder if your company is dealing with that as well, just the difficulty of kind of keeping pace with how fast all of this is moving.
Yeah, thanks for that question. I think about that as we look at what is the replacement cost rent to build the next marginal building, whether it's logistics or data centers. And we look at that right now, and the cost, the rent to build that next building is actually 25% higher than market rents today. And then I look at that relative to our in-place rents today, it's actually nearly 45%. And one of the key issues is the cost to build are getting that much more expensive, and labor is certainly a factor there.
Interesting. Hey, one thing just to follow on, going back to data center and your build out, you talked about also the acquisition of 5.2 gigawatts of power. It's a lot. How much, though, is in terms of the build out for data centers? You've got to track it with having access to power. And does that slow some of the build out? Just got about 30 seconds.
You know, this 5.2 gigawatts that we're quoting is just a portion of the universe of opportunities we actually have given our size and scale. With our 6,000 buildings, there's 14,000 acres of land. We already own this land and these buildings at logistics bases. And so we brought in-house expertise. We have a very large energy business. We've got 1 gigawatt of power that we'll be generating off our rooftops by the end of 2025. So we've been building that energy capability that gives us just a better relationship with the power companies.
Yeah.
And so we're in great shape there.
That was Dan Leder, president and incoming CEO of Prologis, along with Bloomberg's David Gora, who will join us a little bit later on as well. Still ahead on Bloomberg Business Week is the head-to-toe denim lifestyle paying off in the age of tariffs. We hear from the CFO of the company that started it all, Levi Strauss.
Consumer strength really strong. That's why we were able to raise the full year guidance, and our product pipeline hasn't been stronger. Now, if you go outside the U.S., our international business was up in the high single digit, and so Asia had a strong quarter, consumer strong. Europe had a decent quarter, consumer in a better place, and so is Latin America.
You're listening to Bloomberg Business Week. This is Bloomberg.
You're listening to the Bloomberg Business Week Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Well, earlier this month, Levi Strauss raised its full-year outlook, warned that tariffs are starting to bite as well. The company's gross margin improved due to higher prices and a larger volume of sales through more profitable channels. So is the head-to-toe denim lifestyle paying off? Levi Strauss Chief Financial and Chief Growth Officer Harmeet Singh expects accelerated growth, expanding margins, and consumer resilience to overcome tariff uncertainty. He joined me alongside Bloomberg senior equities reporter Bailey Lipschultz.
We had a real strong quarter, 4 consecutive quarters of high single-digit growth and record gross margins, as well as the fact that we were able to raise our full-year guidance, as well as gross margin and EPS expectations. Overall, as a company, we're a stronger and a higher performing company defined by accelerated growth, expanding margins, and higher return on invested capital. To your question about the consumer is largely being resilient. Our products are really well segmented. We have Blue Tab, which is our premium high pinnacle product, and that's doing well. We've introduced that in the U.S. So far, so good. We have a Red Tab product that is basically marketed to consumers who earn between $100,000 and over, and that's based on our results really done well. And then we have a signature product sold through Walmart that again had a banner quota, and that's for lower income consumers. So consumer strength really strong. That's why we were able to raise the full year guidance, and our product pipeline hasn't been stronger. Now, if you go outside the U.S., our international business was up in the high single digit, and so Asia had a strong quarter, consumer strong. Europe had a decent quarter, consumer in a better place, and so is Latin America.
Well, I'm just going to lay it out for you. I think I bought my first pair of Levi's in a long time, just a couple of months ago. And my daughter, who's 22, so much younger than me, has been buying Levi's for a while. So, Bailey, I mean, they're back. I go into the store in downtown in the Village, and yeah, it's packed.
Well, you get a partnership with Beyonce, all
Yep.
of the marketing you guys are spending in terms of targeting both young and older generations. But Harmeet, I want to ask about tariffs. So Levi expects tariffs from China about 30%, but increased expectations to 20% from the rest of the world. Where are you sourcing your jeans materials? Are you more exposed to that doubling in terms of, are you getting materials from Vietnam in place of China?
Yeah, so overall, we're taking a holistic approach as we are able to offset the tariff impact. As you think about this year, we raised guidance in the top line and the bottom line and gross margin. So, we've been able to withstand that. To your specific question, Bailey, we source about 1% we import into the U.S. from China, a little over 1% from India. And Vietnam is in the mid to high single digits. So most of our imports are from the Southeast Asian countries. Think Bangladesh, think Pakistan, and the rest of Asia. The way we think about our supply chain, it's fairly well diversified. We import from about 20 countries into the U.S. 60% of our business is outside the U.S. And so we're well positioned to mitigate and offset tariffs. And the way we're thinking about the holistic approach, given that volume is driving a big piece of our revenue momentum, and we have tenured vendor relationships. We're working with our vendors. We're looking at different cost efficiencies across our organization, as well as being very thoughtful about pricing.
So let me just ask you, though, you guys did, you mentioned you raised your full year outlook. You did warn that tariffs are starting to bite. Profitability to measure by gross margins improve. So these are like good stuff. But again, that tariffs are starting to bite. Harmeet, can you tell us what that means? What the bite of tariffs? When, how much? Any color around that?
Sure. So, overall, we were able to raise top line and bottom line guidance despite absorbing tariffs. And so we are able to mitigate it. To the question about tariffs, tariffs were introduced on Liberation Day. We normally buy our products, 6 months in advance. And so, we are working through, our efforts, and we've got different levers to kind of position it. So you take quarter three, the quarter we just reported, gross margins are record. So we're able to offset tariffs because we got other things working for us. As we grow our women's business, our direct-to-consumer business, and international, all of which are accretive to gross margins and allow us to mitigate and offset some of the tariff exposure. Quarter four, we did guide gross margins to be slightly down versus a year ago. And had it not been for tariffs, we'd have grown gross margins. But overall, as we think about the year, we'll report, again, another year of record gross margins. So we're working on levers for 2026. The good news is we'll end the year stronger, and we believe we're well positioned to have another strong year in 2026.
And Carol, we've talked with a good friend, Peter Atwater, for quite some time about that K-shaped recovery, where people who are well off are doing much better than those really in the bottom quintile. Harmeet, when you look at your goods, when you look at the ability to raise prices from the impact of tariffs, which products are you able to more easily raise prices where you aren't going to see consumers push away? And how are you thinking about that strategy as it relates to, say, the jeans that you do sell through a Walmart where you don't have that gross margin going direct to consumer, and you do have likely, at least when we look at the data, a consumer who's feeling the pinch of inflation, broadly speaking?
Yeah, and so the first thing, Bailey, to your question, is our products are well segmented depending on the income profile of different consumers. I talk Blue Tab, Red Tab, and Signature. Signature is what's sold into the lower income consumer. We've been very thoughtful about pricing. We're leading with product innovation rather than price. And so we're doing what we can to maintain a price point. It was evident in quarter three. Signature, for example, I think is up in the low double digits for the year. As we think about our other products, the good news for us is our product pipeline has never been stronger. We're leading with loose and baggy while at the same time selling a lot of slim and skinny, both for him and her. We've got wonderful, waist up products. Think trucker jackets, think linen shirts, et cetera. And so as a company, we're making this pivot to be more of a denim lifestyle retailer going forward. Our past was all about denim. Our future is going to be about denim lifestyle.
I just want to know, do you really have a pair of baggy barrel jeans? I can't get my head around them. I'm trying. I haven't done it. Harmeet, what I do want to ask you too is you guys have had kind of a mission, a goal to get to 10 billion in sales by 2027. I think you may have adjusted a little bit. I think also a 15% EBIT margin. Could you reach 15% in the next few years, even if sales have not hit that 10 billion? Talk to us a little bit about that mission.
Yeah, no, we gave out the expectation of 10 billion and 15% on our investor day in the middle of June 2022. Since then, there's been a lot of change and a lot of uncertainty. As a company, we have kind of navigated our way through uncertainty. We haven't given a new date on the 10 billion and the 15%. Mm-hmm. Our thinking is we'll probably do that sometime next year. But to your question, the company that we are building and the company that is got the foundation given where we're ending this year. So you take 2025, we'll end at about 6% organic growth. Last year it was 3%. The year before that it was flat. If you think in EBIT margins, this year we'll end about mid-11s. Mm-hmm. Last year it was in the mid-10s. The previous year it was about 9. So we've seen a steady progress. And our view is we probably get to the 15% faster than we get to the 10 billion. Uh-huh. But really a company that is steadily delivering mid-single-digit growth in a category that probably grows a little, south of that. So our view is that we are market leaders now in the U.S., number one in men's, number one in women's, and really resonating with the youth. And so the question is, if you're able to stay at, and implement our strategies, our view is we can continue to be market leader and probably pick up a little bit of share, especially because the denim category is accelerating. We have seen the acceleration in the U.S., we've seen the acceleration outside, and that's largely driven by the world becoming more casual.
Yeah, I have more jeans in my wardrobe than I've ever had since high school. It's really kind of wild. Anyway, Bailey, I know you've got another question.
Well, I was just going to ask, in terms of geographic expansion, when you think about China, what's going on with China, and also what products do the Chinese consumers want? Is it that high-end good, or is it more of a bargain purchase?
So China for us is still underpenetrated. China represents about 2 or 3% of our business. Our business in China has been slow and soft. The Chinese consumer right now is going through a bit of a macro uncertain climate. But the good news for us is they love the brand. Our brand equity scores are really solid. We think China can be, a business that grows double-digit over the long term. But to your specific question, the Chinese consumer is fairly discerning on the brands he or she gravitate to. There is a high-end consumer as well as a consumer the mid-market consumer, what we call the core products. So if you think about our Asia strategy, we really, our products are relevant for the mid-market consumer, while we also offer products for the higher premium end consumer. Mm-hmm. 30% of the Asian denim category is premium. Premium, for example, our highest pinnacle product is largely Japanese, fabric, Japanese denim, and inspired by Selvage. And so that's what we are selling. And I think over time, we'll be able to start growing our China business back in the low double-digit range.
Yeah, interesting, Seth. I will say, Carol, I know you mentioned you have more jeans than ever.
I do.
I have been buying the Sherpa jackets, the denim jackets, like crazy. I don't know why. I have 3 of them in different colors.
I bought a bunch of denim jackets,
that's
too.
What I'm in. I don't wear jeans. I wear chinos, but I wear the denim jackets like crazy.
I know. I don't know. I love it. I love it. I ask like everybody at work. I walk in with jeans every morning.
Yeah, and Bailey and Carol, now we've got the Blue Tab. It's a fuller jacket. You can definitely wear it to office, depending on the dress environment at Bloomberg. I walked in here fairly casual, so it's something that we are now beginning to offer, which should make your wardrobe at some stage.
Our thanks to Harmeet Singh, Chief Financial and Growth Officer at Levi Strauss, Bloomberg Senior Equities reporter Bailey Lipschultz joining me there as well. Coming up on Bloomberg Business Week, more from the C-suite and another clue on the U.S. economy amid a lack of government data. The CEO of industrial supplier Fastenal weighs in. That's coming up. This is Bloomberg.
This is the Bloomberg Business Week Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, earlier we talked about logistical real estate, warehouses and such. And now we're talking about another essential part of the U.S. economy. Industrial suppliers, which are often a bellwether for how companies are dealing with shocks to the supply chain or tariffs. Earlier this week, Fastenal reported third quarter earnings per share and operating income that were slightly below expectations. Analysts note that pricing during the quarter was weaker than expected and marks the second straight quarter of soft pricing. Bloomberg's David Gore and I spoke with Daniel Florness. He's CEO of Fastenal. We talked about how his company is handling tariffs and pricing concerns for the company's customers.
We had a really good quarter. We had a double-digit quarter. We hadn't seen that for a couple years. Double-digit growth, sorry, and pleased with the outcome. One of the challenges we had this year was there's a lot of fluidity around tariffs and what it means for pricing, and we will raise price to address costs in our customer's supply chain. We really don't want to raise more than that because we believe it impairs our ability to grow as fast as we'd like. And coming into the quarter, we estimated X for impact of pricing, came in a little bit less. We lowered our number for the fourth quarter. But the most important aspect is on a price cost basis, we are neutral, and that's what we aspire to be. We'd rather just grow.
Just one more question on pricing in terms of expectations. Would you want to raise pricing? Do you get the sense that consumers and customers would push back just given how you've been shifting into bigger customers spending much more money?
Yeah, customers always push back on pricing. Doesn't matter the size customer. We are having conversations with our customer. We will be doing some price increases in Q4. I suspect we'll be doing some price increases as we move into 2026. But again, our first discussion with the customer, they understand it. They're willing to move on price. Our first discussion is always, what are alternatives to this product that maybe doesn't mean we have to raise your prices 5%. Maybe it means it only has to be 2%. And we'd rather go to 2% because that's what a supply chain partner does.
Well, Dan, how do tariffs fit into this? Just given that, according to analysts across the street, when we look at certain industries, now is when we're going to see tariffs showing up in the third quarter in guidance as it relates to 2026. What are you seeing and how are you kind of attacking or addressing any pressures from tariffs?
Yeah, so for us, tariffs have been in the equation since the early part of the second quarter, a little bit of the first quarter. I think in the individual that handles pricing, historically, he'll provide us an update once a month. He'd gotten to the point where he was not only providing us updates, he was up to video number 14 as of July that he was serving out to the field, giving them guidance into what we were seeing in our supply chain. And so we've been adding price as we've gone through the year, and these have been discussions with customers. And I hope that answers your question.
No, I think it does. But I think the big thing is, are you mitigating the impact of tariffs? Are you shifting your supply chain? Is the expectation that you can have some kind of knock-on effect as it relates to pricing if we do continue to see threats from the president going after countries like China or others? So how is that impacting when you look at your supply chain and when you look at the potential for pricing impacts in 2026?
We've been moving supply chain around the planet in earnest since 2017, 2018 timeframe. As our name would imply, we sell a lot of fasteners. And most of the fasteners in North America come from either mainland China or Taiwan. And the automotive industry took the production there back in the 50s and 60s, actually took it to Japan and South Korea, and it migrated from there. If I look at our resources, we now have a sourcing team in Shanghai, but we have a sourcing team in Bangkok. We have a sourcing team in Northern India, and we have worked to diversify our supplier base around the planet and a little bit more in North America, but really around the planet. So to have diversity in supply, so you're not caught off guard by some price change or a tariff change. In addition to that, we've taken supply chains coming in North America, which traditionally came in through the West Coast of the United States, and then we would redistribute from there. We have moved supply chains so they're bringing product directly into the West Coast of Canada or the West Coast of Mexico, because those two countries represent about 14% of our revenue. Now, you bypass the tariff. However, it's more expensive to break shipments down over in Asia and bring them in, but it's a lot less than a tariff.
One of the things I want to ask you, you talk about supply chains. Is the end game, is it about largely reducing your exposure to China, which has been a pretty big one? It's
reducing our customers' exposure to any market, in this case, China and or Taiwan, but to any market that are on the receiving end of some of the political winds and create an unstable supply base for our customer. Here it happens to be China. Another month, it might be a different country. Another year, it might be a different country. It's diversifying your supply chain so your eggs are not all in one basket.
Got to be ready. So
that's for our customer.
Yeah, whichever way the winds blow. Hey, one of the things I want to ask you just big broadly, the earnings update today, you talked about the industrial environment still sluggish. We've heard similar commentary on this persistent sluggishness elsewhere from manufacturers, as well as caution around project delays. At what point does this become something more worrying than just sluggishness?
For us, it's been sluggish since November of 2022.
Okay.
When we really key on what the Industrial Institute for Supply Management puts out, the PMI index. Mm-hmm. And that's been sub 50, which really plays into our customer base. Other than January and February of this year, that's been sub 50 since November of 2022. So we've been in a sluggish economy for a long time from our perspective. And other than living through the first part of it, where you had customers that were downshifting, reason our growth is shining through in a different way, A, I think we're executing at a higher level, but B, once you get through that downshifting, now you're just, even if your customers are at a subdued level, you can grow in that kind of environment. And that's what's shining through in our numbers right now.
All right, one thing I want to ask you, because as you would imagine, I don't know how much of this is pervasive in your world, but AI is like the nonstop conversation that we are having, certainly when it comes to activity and market impact. To what extent is AI maybe sucking up the oxygen in the economy? Are you seeing any signs of that? Or your world, they're going to still need what you guys supply no matter what's going on with the AI spend and enthusiasm?
Well, first off, we have we have a meaningful improvement in our revenue as it relates to things like data centers, because we sell into a wide range of customer needs and end market needs, whether that is the actual construction. I visited many data centers being built where we have people on site there. After it's built, we're supplying into that facility with things like air handling and maintenance equipment. In the case of customers that sell into that sector, that's actually a strong business for us right now. And then as an organization, we're increasingly making use of AI in our own business and how we go to market and how we help our employees be more efficient in what they do.
And Dan, about 45 seconds here. With With keeping in mind data center construction, where are those products sourced from? Are those also heavily sourced from China and exposed to tariffs, or are they a different supply chain altogether?
They're mostly a different supply source, but it depends on the component. If it's facility maintenance type products, they're coming from anywhere on the globe, and so they're subject to the same type of issues any product would have. But a lot of the components, I know a lot of the manufacturers that we sell into. I visited one about a year ago in Michigan, where they were purposely avoiding China, and they're selling directly into the data centers.
You've been at Fastenal for a long time. You've seen different cycles. How do you describe this one? And again, just got about 20 seconds, if you could be very quick.
Odd in the fact that, similar to what we saw in 18, but odd with the fact of it's just so damn fluid. And there's so many things that occur from week to week, month to month that are outside the norm, but the fundamentals still work.
That was Daniel Florness, CEO of Fastenal, joining us from Minnesota, along with Bloomberg News correspondent and host of the Bloomberg Big Take, David Gora. By the way, this past week, Bank of America removed Fastenal from its US 1 list, which represents the bank's best investment ideas. BofA also lowered its price target on the stock to $48 from $49 a share, but kept its buy rating on the stock. Meantime, Barclays also lowered its price target to $45 from $49 a share. That wraps up our first hour of the weekend edition of Bloomberg Business Week from Bloomberg Radio. Ahead in the next 60 minutes, a government shutdown, chronic crime, and more, how the mayor of Baltimore is managing.
We go and we identify those who are most likely to be the victim or perpetrator of gun violence, and we focus on them. We give them opportunities to change their life, and if not, we remove them via law enforcement. And that's how we're driving down violence. We're focusing on guns and the flow of guns into our city, going after gun traffickers, those who are using guns, arresting them at my direction with the police department, turning them over to our state's attorney and our attorney general.
Also, sideways inheritances and the transfer of money, wealth, and influence from men to women.
Women, as you say, they do things differently, right? And they want to do things differently. And oftentimes when they're getting a hold of this wealth, right, when wealth is passing to them either through their parents and family or through their spouses, they want to do it differently. They want to be served differently. 70% of women leave their husband's financial advisor after a divorce or a death within 1 year.
Plus, the culinary producer behind all the food action in the Emmy Award-winning hit The Bear, and the youngest female self-made billionaire in the world. That's all ahead. This is Bloomberg Business Week. I'm Carol Massar.
You're listening to the Bloomberg Business Week Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
We're back here on Bloomberg Business Week. Tim is off this week, but we've got plenty ahead in this second hour of our weekend edition of Bloomberg Business Week, including the mayor of Baltimore on how he is fighting gun violence in his city. Then the great transfer of wealth, sideways inheritances, the feminization of wealth, whatever you might call it. Women are increasingly in charge when it comes to money, power, and influence. Also, we've got two of Bloomberg Business Week's screen time ones to watch: the chef and the culinary producer behind the Emmy Award-winning hit The Bear, and then the youngest female self-made billionaire in the world and what she's doing with passes. We begin, though, with a view from the ground up, and that's why we always love talking to mayors around the country. They are the ones on the ground in cities and towns across the United States, making the decisions that affect the lives of people in their communities and hearing from people in their communities. Now cities are especially in the spotlight as President Trump slams many of the United States' major cities and threatens to send in the National Guard, a policy that has faced resistance from Democratic governors, mayors, and some federal judges. Tim and I spoke with Baltimore Mayor Brandon Scott about how he is tackling crime in his city without the National Guard and how his residents are doing amid the government shutdown.
Well, there's a lot of my constituents on unease, right? When you're thinking about over 12,000 Baltimoreans work for the federal government, either directly or on contract. And then when you think about what that's going to mean for them and their families, they're just not at ease right now. And folks want to go to work. They want their government to be working. And of course, then all our residents who depend on programming and things that are just going to be out there that may not be having a direct impact as of yet by the shutdown, but as it continues and goes on, it would be.
What do you consider What do you consider your biggest problem in running the city? I mean, Baltimore, we've reported about it a lot. It is the fourth most dangerous, according to U.S. News and World Report, this summer ranking Baltimore the fourth most dangerous city in the country, behind Memphis, Oakland, and St. Louis. Based on FBI data, they look at property crime, they look at murders per capita. But what do you, as mayor, I'm sure there's a lot that's on your plate. What's top of mind? Well,
listen, violence is always top of mind. It's the reason why I got into office, and we understand that we have a long way to go. But I know you guys know here at Bloomberg Radio the many years that we were number one on that list. And as you and I are talking today, I think it's the mode and the conversation around Baltimore and violence has shifted significantly. We have the fewest amount of homicides through any October 7th on record today. That is a big change. When I said in 2021, laying out a comprehensive violence prevention plan, that we were going to reduce homicide by 15% from one year to the next, people literally laughed. Right now, it's down 30% from last year, and last year was a record reduction for us. We're going to continue that.
How did you do it?
We did it through our comprehensive plan.
Which is what?
Which is a bunch of things. One, first and foremost, we go and we identify those who are most likely to be the victim or perpetrator of gun violence, and we focus on them. We give them opportunities to change their life, and if not, we remove them via law enforcement. And that's how we're driving down violence. We're focusing on guns and the flow of guns into our city, going after gun traffickers, those who are using guns, arresting them at my direction with the police department, turning them over to our state's attorney and our attorney general. We have historic levels of investment into community violence intervention, where we have people who used to be on the other side of the law going out and preventing conflicts from escalating into violence. All of it. We're going after gun manufacturers.
So people who understand where the problems are, and you're pulling them in to help you get at the problem.
They were the problem.
Yeah.
And now they're part of the solution. And what better way to do that?
How do you get those people to do that?
Well, easy. First and foremost, many people who have made that mistake don't want people coming behind them to make that. And they know that we're growing this network of community violence intervention workers in our city. So the word is out that we want to give people a second chance to be a part of solving a problem that they once were causing.
The city, though, in the crosshairs of the president, he called it a hellhole last month. You and Governor Wes Moore said that law enforcement from the state will patrol some areas. Has that begun?
Yeah, that's begun. And that's the governor is actually restarting something that was ended by his predecessor. Think about it like this. You would not find any other state police department in any state in this country not operating at all in its only major city. That's Baltimore City was the only jurisdiction in Maryland that Maryland State Police did not operate in. The governor's restarting that. We're grateful for that support and to continue that work.
Are you open to the president sending National Guard troops to the city?
No, we've been very clear about that.
Why not?
We know how to reduce violence in Baltimore. We have reduced violence to its lowest levels ever recorded on record, even lower than the president's first term. The way that we have done it in partnership with our community, with our police department, with our state's attorney, our attorney general, and our federal and law enforcement partners who work beside us each and every day. That's how we should continue that work. If the president wants to help us, he should restore grants and funding that was cut to organizations that help in that. Restore grants, funding cut from those law enforcement agencies. This president has had the biggest reduction in funding for federal law enforcement agencies. They should be restored.
What funding are you not getting as a result?
So for us,
specifically,
we have not been directly impacted as of yet. It's our partner organizations, like, for example, LifeBridge Helps, that runs the Center for Hope. There's a part of our CVI network that has programming around
CVI?
CVI's community violence intervention. They lost a $500,000 grant. The same thing for Living Classrooms. That's big work that is going to be not happening, whether it be a hospital-based response, our community-based responders. We need a victim assistance for young people, getting those young people the services they need. That helps to prevent violence as well.
What will you do, though, if the president sends troops
Well,
to the
listen,
city?
we'll be prepared to take whatever action that we can, be it legal or others, alongside our governor and our team, based on when, what, and how the president does something, if he does anything. But what we hope the president does is to continue to support those agents that are already working in our city, and let them do their work, and let the law enforcement partnership that has driven us results this far carry us all the way.
But even though crime has improved, even though you shared statistics that show they're the best that they've ever been, like Carol mentioned, this your city is still on a list that you don't want to be on. So what would you say to people out there who are saying, well, I would feel more comfortable if there were an increased law enforcement presence, and that could include federal troops?
Well, we had the National Guard in Baltimore in 2015. following the unrest of Freddie Gray. It's one of the most violent years ever. It didn't help, right? We have to remember this is not what those folks signed up to do. Allow those folks who signed up to go after gun traffickers, murderers, robbers, carjackers to do their work, and allow the other people to do their work. And listen, there are other lists. There are many of these lists. We were on some lists we weren't on. The list that we want to be on is the list of who has the largest reductions, and you will be hard-pressed to find a city in this country that's had a sustainable long-term reduction like Baltimore's had from September of 2023 until now.
What do you see as what's wrong with politics today? What do you think is wrong with what some say is the Democratic Party not very clear in its mission and kind of stepping up?
Well, very simply, I think that
I ask you because I think there's a lot of, forgive me, but there's a lot of folks who think there are politicians who've become career politicians and things haven't changed and we need some change.
Well, I think that what folks have to understand is that for me, and I say this about the Democratic Party all the time, and more recently, they have to let the folks that are closest to the problem be out front and part of the solution, meaning they need to listen to mayors. The mayors are the ones that have to solve the problems. The mayors are the ones that have to meet the people in the grocery store. And we've proven in city after city after city, we know how to drive down crime. And you have to talk to people where they are. We have to get out of being up in the sky with pie in the sky, talk to people in real sense, real things that impact them, and explain to them how these things are going to make their communities better.
How long do you want to be mayor?
I want to be mayor for as long as the residents of Baltimore will have me. This will be my second term. Believe it or not, I've been in elected office since 2011, and I've been in City Hall since 2007.
And you're a young man right now.
Yes, a youngish man. I'm 41. I'll be 42 on my birthday. But this is about making my city better. I got into this service because I saw someone get shot at 7 years old and no one cared. And wanting to drive down that violence, to have vacant housing be at its lowest point in my lifetime in Baltimore is something we're proud of, but we're not celebrating. We have a lot of work to do, and we're going to do it.
The reason I go back there is I do think we talk about this in media, that there isn't a lot of, local publications anymore. A lot of newspapers have shut down, and so we get kind of the high and the...
Yeah, we don't need that. Yeah.
We get that view, but we don't... This is why we love talking to mayors. But often people are mayors and then they move up and they go to governor and then they go to Congress and stuff. So I'm just curious, how long do you want to stay on that local level?
Well, everyone knows.
What's the end game?
Everyone knows I don't want to be governor. And everyone in Baltimore knows that I'll be quite okay if being the mayor of Baltimore is the last elected office I ever had. This is my dream job as a child. I will hold it as long as the residents of Baltimore will allow me to do so, and as long as I'm living within term limits.
Before we let you go, because you have a train to catch to get home,
yes,
and we want to be respectful of your time, the attracting and retaining business to the city, we know that's economic development is a way to improve cities. Yeah. What are you doing right now to say Baltimore is open for business? Yeah,
I think the way you have to understand, we had $4 billion of investment into Baltimore. We have $7 billion investment coming to downtown Baltimore, whether it's T. Rowe Price's new headquarters or Under Armour's new headquarters. Everyone knows throughout downtown Rise plan, we are open for business in the city of Baltimore, reforming our permit process and reforming our zoning code, all the things that we need to do to help grow business in Baltimore, especially in the tech and life sciences industry that is taking off out of Hopkins and out of the University of Maryland, putting a lot of money and a lot of tech businesses out into the EFA.
Any signs that we're headed towards a recession?
Well, we'll see. We know that with tariffs and all the other things going, we just have to all be mindful of what's happening and prepare. As we're doing our budgets, I've been talking to my brother and sister mayors to make sure that we're being responsible right now because we do not know yet what is to come.
That was Baltimore Mayor Brandon Scott. You're listening to Bloomberg Business Week. Coming up, how women are joining the billionaire ranks.
The majority of them were actually moderate to aggressive because they saw the power of not just gaining wealth through working or through transition, but actually gaining wealth through the capital markets, right? Investing in items that will, and securities and portfolios that will actually help them grow their portfolio. Private markets is a great example. Again, for a financial advisor to play that role and help and coach and guide a woman in how she thinks about her portfolio across public and private. Women oftentimes want to.
This is Bloomberg.
This is the Bloomberg Business Week Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Wall Street is experiencing a new type of wealth transfer. More than a dozen women in the world's 500 richest people have become billionaires after the death of a spouse. That's the highest number ever. These so-called sideways inheritances are increasingly shaping global business as women take over huge empires, from finance to consumer goods and gambling. Today, those women oversee record fortunes totaling $365 billion, roughly tripling since 2016, according to the Bloomberg Billionaires Index. The changes are creating huge implications for how vast sums are invested. Bloomberg's Matt Miller and I spoke with Jamie Magira. She's head of U.S. Wealth Advisory and head of retirement at BlackRock. It's the world's largest fund manager, which notched a record $13.5 trillion in assets. BlackRock reporting earnings this past week, so we got an update on that number. We talked with Jamie, though, about the ways women are reshaping the investment industry.
You know, we are talking about the environment generally, so let's start there. I know we did that over the summer when we talked, because BlackRock just sees so much in terms of the funds it oversees and the flows continue to grow, but that doesn't mean the flows are always going in the same places. What can you give us insight in terms of where money is going and where money is going out of?
Yeah, so first of all, excellent to be here. And you started by talking about flows. I'm going to take a gender perspective on flows.
Yeah.
And talk to you a little bit about where we see money going globally with women. And so women more and more are earning wealth, they're acquiring wealth, they're owning wealth, they're playing a larger role in capital markets. They are investing and benefiting from these capital markets, and we think there's no better sign of hope in the future than having people invest and grow along the capital markets.
Is it because they're earning it themselves and they're having some say, or is it also in terms of couples, because they are often breadwinners as well, that they also have a say at the table?
Yeah, so it's both, right? So when you think about women, women are more often now becoming breadwinners, primary breadwinners, quite often. They're also contributing to household along with their spouses. They're earning more money, but they're also acquiring. And you mentioned the wealth transfer.
Yeah.
You know, we think about that in two ways. There's the intergenerational wealth transfer, where they're gaining assets maybe from their parents as they pass away. But the more interesting one is this horizontal transfer, right? So if a spouse passes away, or if there's a divorce, women are acquiring assets in that way. And they need financial advisors to help. They're reshaping the industry. And women have just not been served in the way they need to be served in the past.
We think about that, right, with Melinda Gates.
Yeah.
We think about it with, Jeff Bezos.
No one died in the Gates
No,
couple.
but I'm just saying there was big divorces.
Oh, I got
and
you.
all
Yeah,
of a sudden
okay.
you had significant players, certainly in wealth overall, but also in philanthropy.
Yes.
Actually, Cerulli estimates that globally, $124 trillion will change hands in this silver tsunami, and then their current forecasts are that 54 trillion will be passed to spouses first before it goes down another generation. So 40% of those spousal transfers will be to women. So this is what Sally Krawcheck calls the feminization of wealth. And the idea is that the important idea, I think, here for your industry, is that when women get hold of this money, they often don't stick with their same wealth managers. They often say, you know what, I'm going to go with someone else now. So what do you do if you want to get hold of a piece of that pie?
Yeah, so maybe I might even just dimensionalize what you mentioned, because I think about it in percentages. So today, let's call it women responsible and controlling 30% of the world's wealth. That will be 50% by 2030. That will be 70% by 2070. So these are big numbers.
That's pretty amazing.
Big numbers.
Yeah.
And women, as you say, they do things differently, right? And they want to do things differently. And oftentimes when they're getting a hold of this wealth, right, when wealth is passing to them either through their parents and family or through their spouses, they want to do it differently. They want to be served differently. 70% of women leave their husband's financial advisor after a divorce or a death within 1 year.
Wow.
70%.
Why is that?
Because they oftentimes felt not heard, not part of the conversation, not at the table and making decisions. You know, there's a lot of misconceptions around women, right? People think women aren't engaged with finances. Just not true. A third of U.S. households have women as the primary financial decision maker. People think women or call women perhaps a bit risk averse.
Well, that's what I wanted to ask you. Are women risk averse? Like, give me an idea when you're talking about investments. I mean, we've been thinking about the AI trade or private assets. Are they risk averse?
So we did a study.
I hate to make generalizations, but I'm curious if there are any.
Yeah, so not a monolith, right? Women are very different. All my friends are different than me. We all do different things and need different things. But generally speaking, we did a study with 2,500 female investors. When we talked to them about their risk tolerance, the majority of them were actually moderate to aggressive because they saw the power of not just gaining wealth through working or through transition, but actually gaining wealth through the capital markets. Right, investing in items that will, and securities and portfolios that will actually help them grow their portfolio. Private markets is a great example. Again, for a financial advisor to play that role and help and coach and guide a woman in how she thinks about her portfolio across public and private. Last time we were together, we talked about direct indexing and the role of taxes, or women oftentimes want to. You're laughing.
Gets me excited, direct indexing.
I
love. You know what? I anchored the ETF show for a long time, and that's a big part of that discussion as well. You know what? It's not just women. Obviously, kids are going to get hold of a lot of this money, and I think. I'm not sure about women, but I know with younger people, they want to do more impact investing than their parents did or their grandparents did. So is that also a key to try? Because I'm thinking from the perspective of a wealth manager who wants more business. Right. So what I need to do is say, hey, I can set up some direct indexing for you, and I can help you make an impact with the money you invest. It's not just to make more money. You're also going to change some part of the world that you want to. Is that the case?
It is. And I like to use the word purpose because actually impact has many different meanings. And so if I'm a financial advisor and I'm working with a younger client or a woman, I'm going to be talking to them, by the way, men too, right? It's not just about the impact you're having. You could invest in a way that maybe aligns with your values. Right? Maybe you have certain values that are important to you to hold in that portfolio.
I love motorcycles, so I would want to buy
holding. There we go.
Ducati stock.
There we go.
But I often wonder about that because, if you care about the environment, but if an investment doesn't pay, are people doing that because they believe in it, but it may not return as much as something else?
I'm going to give you an answer that will be terribly unfulfilling. It depends. Okay. Right? So there are people, and by the way, let's step away from the portfolio for a moment and say, what about philanthropy? This is where I come back to purpose, right? Yeah. People are looking to put their money to good cause. And that might be philanthropic. It might be impact in their portfolio. It might be aligning with the values I have. It might also be sending my children to school or helping my elderly parents. Right. Or starting a new business, right? How about that for purpose?
Or shielding your money from taxes, right? I mean, I guess I'd be willing to take somewhat of a loss by putting my money into a philanthropic vehicle, especially if it's compared to a much bigger loss by giving it away to Uncle Sam and state and local and federal taxes.
Absolutely. Yeah. And again, that's where
you don't look at things in a vacuum. You have to look at them overall.
Holistic wealth planning, and again, the role of a financial advisor is critical there.
Got to ask you, just in general, when you look at this environment, and we talk a lot about a bubble right now. I don't know, what is your take on it? What are the conversations you're having with clients about how they feel about it? Are they a little nervous about that trade?
Yeah, we talk to clients, advisors, end clients, institutions globally all the time. Look, the markets are the markets, and there are long-term investors that need to just keep staying with the markets. We talk about it's not time in the market or timing the markets, it's time in the markets. The other thing, though, is you just have to acknowledge that there's uncertainty out there. Right? There is volatility. There are things going on in the markets that, again, everyday people, let's take it to America and Americans, everyday people need professional advice. They need someone they can trust that will help them navigate that through professionally managed solutions or through advice. But there is uncertainty out there. But again, we come back to it's time in the market, not timing the market.
20 seconds, Jamie. I mean, are more people feeling comfortable putting money to work? Or are they, after kind of a nice bounce from the April lows, or they're like, I'm good, I'm done, I want to be a little bit more conservative? Just quickly.
No, we are seeing flows into portfolios in ways that are across.
As I said, BlackRock was up $1 trillion since the summer we talked.
We are having the best conversations we have ever been having with financial advisors, institutions, and wealth managers across the world. People are very interested.
That was Jamie Magira, head of U.S. Wealth Advisory and head of retirement over at BlackRock. Bloomberg's Matt Miller joining us as well there too. Still ahead on Bloomberg Business Week, a recipe for success when it comes to storytelling. We've got the chef and culinary producer of the Emmy Award-winning FX hit, The Bear.
There is so much camaraderie, chemistry, teamwork in kitchens that gets you coming back every day. I learn so much about who I am as an individual by the challenge of, running restaurants, line cooking. Not only do I develop my skills as like an actual chef, but I think as a person, I've learned so much from every single person that I've been in a kitchen with.
And exclusive access to influencers without the nudity. It's the latest venture from the youngest female self-made billionaire in the world.
Anyone can make money. It's more so like the amount of people that are willing to put in the time to make the content, right? It's just like how many people are willing to work hard to make that income. And when you just look like really every career on this planet, there's a limited amount of people willing to put into effort. And we see that the people that are willing to put into effort to like churn out content are the ones succeeding.
More of our favorite conversations at this month's Screen Time event. They're coming up next when Bloomberg Business Week continues.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
So we wanted to wrap up this hour by bringing back some of our favorite conversations from this month's Bloomberg Screen Time event held recently in Hollywood, California. And that brings us to a chef and a culinary producer of the Emmy Award-winning hit FX show, The Bear. She is on Bloomberg Businessweek Screen Time Ones to Watch list. She is Courtney Storer, and she sat down with Tim and me to talk about her world.
Culinary producer deals with kind of macro and micro issues of the show. So I work very closely with Christopher, who is the creator of The Bear, also my brother. And then, the writing team. And I kind of help inform some of the character development based on my own personal experience. And then every day on the show, I'm there. I do work hand in hand with my culinary team, and we do all of the food. We cook it. We don't have food stylists, so everything you see on the show, we run it like an actual restaurant, so we have a full team. But I'm also there to help sort of work with, the film department, set decoration, props, to make sure we are as accurate as possible. And I wear a lot of different hats. So wherever they need me, I go, but I definitely use the script to inform the direction of the food. And then I'm responsible to work with the cast to kind of bring those things to life. And as you see on the show, these actors are actually cooking. So we don't use hand doubles, like they're doing it.
There are such a thing as hand doubles in cooking.
Of course, yes.
All right. So, okay, first of all, it's like the food is, I don't want to say it because the actors on the show are incredible, but it's like the main actor. So how hard is it to do what you do?
It's actually, it's challenging, but it's very fun because I'm coming from the real restaurant world. I'm a chef.
Yeah.
I've been a chef here in Los Angeles for many years. I've been in the restaurant world forever. And I think bringing these things to life takes a lot of information of all the restaurants that I've been in, and then doing it on camera, and then having it not only look great, but time and temperature sensitive wise, we shoot very, very fast. So it really is a team effort to be like, this is the end dish, and getting everybody in the loop of how and when to shoot it. When it looks perfect.
You don't want things melting or mushing or right? Yeah.
So you have this background as a chef. You
Yes.
have a chef. You have background in culinary training.
Yes.
Maddie Matheson, of course, is an actual chef. Jeremy Allen White did go to
Yes.
a couple of weeks of culinary
Yeah,
school.
Io did too. Yes. Io went, Liza went. They all spent time with me directly here in Los Angeles in my kitchen, my catering kitchen, where we trained to work on some specifics for the show that would be done on camera. As you see, Tina's character, she's, filleting Bronzino in culinary school. And she's left-handed. So how we filmed that scene and how she had to practice that scene, it's like we have to actually apply these skills so that they read on camera. And it's been so helpful for their own journey to actually experience culinary school, working with chefs, staging in restaurants, and then actually doing it on camera really helps them get it right.
Go ahead.
What were they like in the beginning? Like, was it like?
I think everyone. Well, I think
Or
there
was
was
it a little crazy.
Io is she loves food. So I feel like Jeremy, Io, Lionel, Liza, they all have passion for food.
Okay.
So that helps. And they were eager to get it right.
I don't want you to diss on them.
Yes, they've come a long way.
It's a different skill.
Yes, they've come a long way, and I see the effort that they've put in each season. And remember, now we're going into our 5th season, so we practice before we go to film each year. So they're building their skills as we go.
So my wife worked in kitchens, so we would watch the show together, and she'd be like, "This is what it's actually like: the masking tape on labeling things, and like we actually drank out of those like to-go containers.
We call them delis.
Okay, that's what it's like. I worked at Taco Bell, so I have no idea what it's
important.
like. But it's not like this at all. But I got to tell you, like after watching a few episodes of the first season, I'm like, who wants to do this? The pressure is crazy. You're getting paid a fraction. It's like the pressure of being a brain surgeon without any of the pay.
Yeah.
And the hours are worse.
Yeah. I think that's a really good question. And I think what the show does kind of do a really good job at is show some of the difficulties and some of the wonderful things. Like there is so much camaraderie, chemistry, teamwork in kitchens that gets you coming back every day. I learn so much about who I am as an individual by the challenge of, running restaurants, line cooking. Not only do I develop my skills as like an actual chef, but I think as a person, I've learned so much from every single person that I've been in a kitchen with. And that's from the porters to the dishwashers to the front of house host to, the head chef. There is always something to learn in kitchens. And it's fun. It's actually quite fun. It's stressful, yes. But there is a reason that people come back every day.
All right. So tell us something where something got burned or went wrong. Does that happen a lot?
On the show?
Yeah. Well, when you're like going through, because timing is so important.
Of course. There's a lot of setting each other up for success. And I have to say, like, without my culinary team, we are very diligently working to make the best of everyone's time that is working alongside us. And there's a huge, incredible camera department that we're, being mindful of them holding these heavy cameras and, getting it right. So we practice a lot before we actually shoot. There is a lot of work on the pre-production side before we have cameras rolling. It's really important that we come and, like, bring our A game because we don't want things to burn. Of course, like we have to redo dishes if ice cream melts or something like that, but we make sure we're prepared to set up everybody for success.
So it's like anything else in terms, like you just
Absolutely.
make sure everybody's on their A game.
We treat it like service. We treat it like a dinner service.
Do you want to change your job?
Yeah, no. I don't think it's in my DNA.
Yeah,
I can't do it.
I think you'd be surprised, though. I think some of my best cooks never cooked a day in their life.
Really?
Yeah.
That's Courtney Storer, chef and culinary producer of The Bear, and on the Bloomberg Businessweek Screen Time Ones to Watch list. Also included in that group is the youngest female self-made billionaire in the world. She is the co-founder of Scale AI, which, after a multi-billion-dollar investment from Meta Platforms, valued the company at more than $29 billion. That's not all that she's doing, though, right now. She is also the founder and CEO of Passes, which helps social media influencers diversify their income streams. Think exclusive photos, DMs, video calls, live streams, and more. She checked in with Tim and me, all from Bloomberg Screen Time.
Anyone can join the platform as long as they're not creating nude content.
So that's it. That's the dividing line.
That's the dividing line.
So talk to us about your growth that you're seeing on the platform in terms of people, wanting to be on it, staying on it. Talk to us about some of the velocity that you're seeing.
Yeah, definitely. Well, with creators that make over $5,000 a month, we have near 100% retention, which is really exciting. We've seen 4x growth from 2024 to 2025, and hopefully we'll see more of that, which is exciting. And then we have crossed 9 figures in earnings for creators, which is also very exciting. So those are just like high-level numbers I can share with you guys today.
Well, some of the reporting around OnlyFans, for example, has shown that like there's a small number of people who make the vast majority of the money on the platform. Is it more evenly distributed on Passes? I
would definitely say it's more evenly distributed, but I would also say that like our top, let's say 30% of creators make the majority of the GMV.
That's a challenge for people who are trying to get in.
I would say that anyone can make money. It's more so like the amount of people that are willing to put in the time to make the content, right? It's just like how many people are willing to work hard to make that income. And when you just look like really every career on this planet, there's a limited amount of people willing to put into effort. And we see that the people that are willing to put into effort to like churn out content are the ones succeeding.
Lucy, how do you bring or attract people to the platform? Like, what do you guys have to do?
So a lot of it is organic, so word of mouth. A lot of creators just talk about like how much they love the platform and how much they've made, and people hear about it, so they end up joining. Other than that, we do a lot of social media. We do a lot of events because we think that's a relationships-driven business, where I think there's like platform retention, but there's also emotional retention, and that emotional retention comes like people-to-people connections. And the creator economy, emotional retention is a very real thing. I would say it's potentially stronger than platform retention. So we work on a lot of face-to-face interactions with creators as well.
You dropped out of Carnegie Mellon for a Teal Fellowship. Obviously, in hindsight, it was the right move. You went on to co-create Scale AI. Incredible success there. I'm just curious, though, about your view of higher education, having participated in it for a short time and then left. How do you think higher education has to change to prepare the next generation of leaders, to prepare the next generation of entrepreneurs?
Yeah, so I think that with higher education, well, first my view on higher education is that I actually encourage everyone to do college for 1 to 2 years. Not because I think you're going to be learning a lot in your classes, but because I think there's no period of time in your life that you're going to be thrown into where you're going to be in a high density of intellectual individuals that all have no friends. Like if you think about it, even when you graduate college and you go enter the job force, most of the people at the company that you're about to work for already have friends. So it's harder to break into a social scene versus college is the only period in your life where literally everyone in the freshman class knows nobody, right?
It's like a grand social experiment.
Exactly. Yeah. And it's a high density network of people that are just as intellectually intelligent as you. And I think college is really where you find your future co-founders, your future hires, et cetera. Because when you're starting a company, for example, who is going to turn down a multi-million-dollar offer to join you? And the most talented people, like the most talented engineers, are getting those straight out of college right now. Only people that like really believe in you because they have that emotional connection. So I really encourage everyone to go to college and meet as many talented people as they can the first 1 to 2 years. In terms of how I see college moving on towards the future, I think from my own personal experience, I do think that we could be learning a lot more practical skills that we can actually use in the job force. So, for example, when I was studying computer science at Carnegie Mellon, a lot of it was very theoretical math, and I felt like I learned the most about product sense, about actually like making apps, et cetera, through hackathons that I was attending every few weeks.
It's almost like the concept of trade schools somewhere with higher education. There's something there. What's your 20 seconds on AI in terms of so the impact it's going to have on our world?
For sure.
Good, bad, or indifferent?
I'm excited. I think that with every technological innovation, things have improved in the world for everybody. I think that we should view AI as our co-pilot and not something that's going to replace us. It's going to help us be better at our jobs.
You're not scared?
No.
Should we be scared?
No.
All right.
Our thanks to Lucy Guo, founder and CEO of Passes and co-founder of Scale AI. And that wraps up the weekend edition of Bloomberg Business Week from Bloomberg Radio. Thank you so much for joining us. Be sure to tune into Bloomberg Business Week Daily Monday through Friday, starting at 2 p.m. Wall Street time on Bloomberg TV, Bloomberg Radio, and on Sirius XM Channel 121. You can listen to us also on Apple CarPlay and Android Auto. It's free in the Apple App Store or on Google Play. You can also watch our daily broadcast on YouTube. Just search Bloomberg Podcasts. We're simulcast on Bloomberg Originals, available at Bloomberg.com/originals, and streaming platforms, including Roku, Amazon Fire TV, Samsung TV Plus, and more. Find our Bloomberg Business Week Daily podcast at Bloomberg.com, Apple, or wherever you get your podcasts. And always check out the latest edition of the magazine. It is available on newsstands at Bloomberg.com and always on the Bloomberg terminal. I'm Carol Massar. Tim will be back next week. Have a good and safe weekend, everyone.
This is the Bloomberg Business Week Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg terminal.